The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. We got jobless claims this morning, highest continuing claims since 2021. Walmart out with their numbers, a little bit negative, off by about 3.2%. Last time I was checking in, you check out Walmart. A little bit of a bounce right now, up to 100, but you're down from about 102.57. Walmart, they miss on earnings, first time since 2022. Jackson Hole, Chairman Powell tomorrow, but right now you get the S&Ps down by 23 points, trading at 63.89. And we got some volume the last couple of days. We'll get into it. NASDAQ 100, you're down by 92 points, 23,232. Quite the surge higher in all the markets in the afternoon yesterday. We'll see if that bounce holds today. Dow right now, negative by about 0.4%. You got the Russell, off by about 0.6%. Bitcoin, down $1,200. We're still off of the lows of yesterday, off 1% at 113,245. Crude, we rise to a high of almost 63.40 in the early session. We're back to below 63 bucks, 62.89 the price of crude. We jump to the 10-year, lower price, higher yield in the last few minutes there. And we're talking about a 10-year right now of 4.32. Okay, 4.32%. You jump over the dollar. DXY, 98.35 right now. A little bit of strength. Gold with some volatility around that dollar. Gold off $4 in the session at 33.84. And let's talk a little price and volume. We jump back to the S&Ps. So we got some volume last couple days. Now, we did have volume with quite a bounce yesterday, which is why today will be an important day. And boy, it really sets the stage for Friday with Chairman Powell, Jackson Hole. All things considered, why would you lock yourself in if you're Chairman Powell, right? You have a full month to go. We're getting a lot of data. Walmart, one of the things they're talking about today is that tariff costs seen rising even week over week. You jump to jobless claims right now. Rise, adding to the signs of a slower labor market. So he's got two mandates, and they're dueling right now. I'm pretty sure that he's more worried about the economy, but just why would you lock yourself in, right? Why limit your options? You lock yourself in, and you get a huge inflation spike. Why do it is the only... Jumping around. Nah, that's not it. All right, I'll find the article I had. Okay. Nonetheless, you get to Walmart. A rare profit miss. Now, they're talking about that it had to do with claims. Okay, whether it's insurance, workers' comp claims, which include general liability and workers' comp expenses, particularly drag down earnings. These charges are expected to moderate as the year progresses. Now, so that's their concern. This is the first time they've missed on earnings, but they guide on the way up. Walmart's doing well, man. Okay. You talk about guiding. Yeah, here we are. They now expect net sales to rise 3.75 to 4.75 this year versus a previous forecast of 3 to 4. It's almost a full percentage point higher in net sales. Now, is that because they're going to raise the prices by a percentage point more than maybe they imagine? So far, the impact's been limited. Prices rising 1% in the U.S. during the quarter. Folks, that's 1% during the quarter. That's 4% annualized. I don't think any of us are okay with Walmart jumping 4%. And you take a look at the earnings in black, the estimates in blue. Yes, they missed. They have some lofty expectations. You say, oh, well, expectations were so high. Look at the earnings in 2022. Look at the earnings in 2025. Look at this stock in 2022, priced at half the price it's at right now, right? So you better have increased expectations. From 2002, 2023, you're trading at more than double the price. That's priced on future growth. Now you get into I want to get the exact quote here. It's a lot of quotes. All right, I'll find it after the break. Yeah, see, it reportedly says, see our costs increase each week as we replenish inventory. You know, Walmart's been talking about it, okay? They are seeing the pressures. The pressures are there. And they're talking about claims today. Their business is doing great, but margins are under pressure. And we'll see how that digests for the consumer. Some of the headlines out there, upper income households, right? This is what we were talking about with Target yesterday. Contributed the largest share of gains in the second quarter. Okay, and it shouldn't be surprising. I bought some stuff last night on Walmart. Yeah, bought some stuff last night, just household items. Pulled up Amazon. Thought about buying stuff on Amazon. You know what's funny, man? This is actually a testament. So I pulled up stuff on Amazon, right? Put it into my cart. Didn't even plan on talking about this, but you talk about a testament. Went to Walmart, found something dramatically cheaper. Order that. 2 items that I needed for household items. One's getting delivered tomorrow. Potentially today. No, one's getting delivered today, and the other one's getting delivered on Saturday. And I saved a bundle, of course. Yeah, not going to Target, that's for sure. You think I price shopped when I was buying some small clothing items and household items on Target? Target shares today down about 50 pennies. They traded lower, but caught a little bit of a bounce yesterday. And yeah, longer term, man, you know, Walmart's got some multiples priced in, okay? But they are growing, and they've talked about that it's almost a good thing longer term if this squeeze is happening, right? When you talk about Walmart. If Walmart's getting squeezed, just think about everybody else and how they're getting squeezed. And think about they're gaining all that market share. When things calm back down, they're going to hold that market share. Yeah, jump over to Costco. Let's go to the chart as well. Costco, slightly in the red today with the market, $9.88 for Costco. All right, let's check out some of the others of yesterday. Low shares right now, slightly in the green. Home Depot with their numbers earlier this week, basically flat right now. You had strong numbers from TGX yesterday, but you almost gave it all up. You came into the numbers at almost 135. You trade up to 145. How about these channels, folks? All right, put that TJX one on your chart. You're watching the program yesterday. I'd say, hey, if you're a short-term trader, watch out for where that thing opened, right? These are those channels. Bud King, the channel master. Longer term, yeah, you don't need to sell at the top of a channel, okay? But shorter term, it bounces right there, man, as usual. Mickey D's right in the middle of its range, slightly lower so far today. Jump over to Kohl's. You got a little meme volatility in Kohl's. Speaking of meme volatility, Paramount Sky. Got a little bit of a pop yesterday, and you're slightly in the green right now with a negative market for Paramount Skydance with the S&P's off by 24. All right, you ever get an acceleration in volume today? And really, this is just setting the stage for tomorrow. As in Chairman Powell, Jackson Hole. But again, he's going to get a whole month of data, right? He's going to get all the August data before he makes that decision in September. He's probably going to talk about that. And we'll talk continuing claims. We'll talk jobless claims when we come back as well. Dueling mandate from the Federal Reserve as Chairman Powell, Jackson Hole tomorrow. S&P's off 24. We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps off by 24 points, trading off 4/10 at 63.89 right now. We're 120 points off of where we were trading at just 6 days ago right now, and we jump over to some of the news of the day. We talk some Walmart, but let's talk some jobless claims. Jobless claims rise. Continuing claims, highest level since November of 2021. Initial claims, 235,000. That's the week ended Friday, August 16th. The market was looking for about 225. Continuing claims rose to 1.97 million. That's 1 week delayed versus initial. Continuing claims, always 1 week delayed versus initial. Why is that? Who's getting fired for that? Why is that? Yeah, I kid, but seriously, why is that? They get initial claims. You can't do continuing claims. They have initial claims. Why can't I have continuing claims for August 16th? Somebody's got that data. The highest since November of 2021. The sustained pickup in new filings risks adding to concerns about the labor market, to put it lightly. 4 week moving average, 226,000. They put the highest in a month, the highest in 30 days. So you got continuing rising. Now Goldman, they say it's time to buy. Be careful, folks. But yes, sharp losses in high-flying momentum stocks present a dip buying opportunity. When the long-short momentum basket dropped 10% or more over a 5-day span in the past, it proceeded to rise in the following week 80% of the time. The median return was 4.5% the next week and more than 11% in the next month. sometimes the tough part about this, as I pause here, right, and you're trading a market like this, is be careful taking any statistic over the last arguably 17 years. And I'm not kidding. Okay? You're talking about a 17-year bull run that only had 2 pullbacks, folks. A COVID scare that realistically nobody ever felt the pullback in equities. Okay? Now you did. We all did. Okay? And there were plenty of people that I'm sure sold in a panic, in fear. Okay? But many people, whether you had money in the market or retirement, right? The nest eggs that were there that we hear about in terms of the Great Depression, the stock market wipeout, all these people, they had their savings that were in the market and it was gone. That's not what happened in the COVID pullback. Okay? Now, the interest rate pullback was real and extended. But what made that one less harsh is we had all just went through the reality that the S&P was adjusting at 2,100, that we pulled back 50% in the matter of 6 weeks, right? Well, at that time, human nature just says, man, if I could just get even, right? If I could just get even. Man, we got even in like 2 or 3 months, right? Stimulus came in, checks came in, nobody lost their job, the market was saved. We were 3,100. We're 100% higher right now, okay? Granted, there's been inflation that's eaten some of that 100%. It's 100% 5 years later where the stock market is. I don't know where that market would have been if the government didn't step in. Yes, they overdid it and inflation ripped open. But what made this pullback easier in 2022 is that the only stress you had to contend with, okay, is that you had less money than you had at the beginning of 2022 and maybe 2021. But all you did was essentially go back to where you were at the end of 2020. And boy, folks, do you remember that feeling of being at 3,600 from 2,100? Okay? Again, you never traded below that. So this real sense of fear, loss, rip-roaring decline, all this stuff, right? You're talking about 17 years. Okay, that was the only pullback. COVID and the Fed, which now we're another 25% above. So real fear in terms of that type of a pullback. So you see statistics like this in terms of dip buying. Okay, it works every time until the last time. All right, that's what they say in the poker tournament. Okay, if a gentleman or a woman is at your table, I know I remember that one well, Duffy, for sure. That had that low in 2009 in the S&Ps, right? Whew. Right around my birthday, March. I remember, man. I think we were in possibly the Las Vegas Money Show when that was happening, or maybe we were at the Traders Expo. I think there was a show going on. If somebody remembers when that collapse was happening in 2009, I believe we were at a live show on some of the real depths of that market as it was happening. I remember my dad with his Bloomberg terminal on his laptop doing the show live from the floor of the show. And I think it was either we went to 2 shows. We used to go to the gold show, the hard asset show, and we used to go to the money show. When those shows really encapsulated the investor community as things went online, investors weren't showing up. Couldn't blame them. You can get so much great education online. And then you had the sponsors stopped showing up, and it was just kind of a evolution. I know they still exist. We used to go all the time, but I think that was going on. But yeah, so you see statistics like that saying, oh, you know, when the market goes down this much, it's like, where are you taking your data from? Because if you're taking your data from a sample size of 17 years where the market's gone up tenfold over that period of time, folks, there's only been 17 years. We're 10 times the value. So imagine, over those 17 years, you could be flat 7 years and have 100% return from your original investment for 10 of those years. That's one way to, you're cherry picking the low, but it's been a heck of a run. And be careful of statistics like that in terms of how far they go back. I mean, it's almost like you talk about yields, okay? Let's just jump around. We got about 2 minutes to go in this segment. That's your 10-year, okay? You look at that 10-year, and yes, we are at a lower price, higher yield portion of this curve. But guess what? That's only going from 2002. We've been living in exceptional times. You take a look at the 30-year, and for a considerable period of time, folks, where there was vast success in the markets, we actually had a higher yield on the 30-year. Okay? Yeah, since the 2008 crisis, okay, they crashed rates lower. I mean, Larry used to talk about it all the time. This isn't how it works, folks. Negative interest rates. What's going on? Right? And yeah, if you look at this, you say to yourself, man, this is a no-brainer, right? And yes, short-term, folks, okay, it's not a no-brainer. There's risk in this market. But yes, pressure is going to be on the Fed. You're seeing it, okay? Trump's going to put in whoever's going to put in May. The pressure is going to be to give the market basically difference in terms of cutting yields and then reacting if they go over. But keep this in mind in the longer term, okay? We had a very healthy economy when we had lower price, higher yield on a 30-year basis. You wouldn't know that if you looked at this chart for the last 17 years. 17 years. It's been a heck of a run. We'll see. 30-year rates, not that bad when you think about this economy. We're coming back for the opening bell. Stay tuned, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets open. S&P's off by 20. NASDAQ 100 off by 82 right now. And yeah, keeping an eye on that volume. Accelerating volume the last couple of days, right? We'll see how the market comes into Jackson Hole tomorrow, Chairman Powell. And as I keep saying, though, yes, there's an opportunity for him if you see him really make the headway and talk about, boy, inflation's the fear that I have versus the economy right now, I just imagine why if unnecessary, right? The pressure he's under, why lock yourself into it when he can just, as he always is very good at, saying, I'm going to let the data speak. We still get a month of data. But hey, the market trading a little bit lower. Check in on Walmart right now. Yeah, Walmart dropping, man. They're under pressure. Look at this drop. There you go. Down by 4.25% right now. Let's take a look at the daily. All right, that was some nice volume on the upside. You had this real acceleration on August 6th. You trade higher with volume. And what are we trading into right now? Boy, maybe come down and test the bottom of this April bar. What do we got? We're coming right into this bar from May 12th. The high of that bar is about $99. Yeah, we bounced nicely, but we're coming into that bar. And maybe that provides a little bit of a floor. But Walmart under a little pressure. Target down by 1.5% right now. Jumping to retail lows off 0.6% right now. McD's off 0.5%. Let's check out the big dogs. Amazon off 1% right now. Go back to a daily. Apple shares slightly in the red, down about 0.3%. Microsoft with some selling yesterday. Right, the most volume you've had in Microsoft yesterday on the downside, going back to almost the beginning of August when you had some selling up here with the top. So volume actually accelerating to the downside on Microsoft. Meta shares, not quite the same deal. Jump over to NVIDIA shares this morning. NVIDIA was one of the strongest bounces yesterday. This stock, particularly volatile. See on a weekly basis, yeah, we get 2 days left. But that was a nice strong bounce, and you did it on volume yesterday. AMD shares slightly in the red right now. Let me jump over to Intel off 1.2. Paramount Skydance up 1.5 right now. We jump around to some of the streamers. Netflix shares. Yeah, Netflix had a little bounce and some selling yesterday as well, but no real volume. No acceleration from the volume you had the day prior. All right, let's take a look at the home builders. Lennar down by 0.8% right now. KB off 0.8% as well. Yeah, you had some real volume on the sell on these yesterday. Look at KB. Let's see, Lennar. Yeah, accelerated slightly. You had a little bit of selling coming into these equities. It's been a little bit of a run. And the writing's not quite on the walls just yet. Let's see. All right, DR Horton down about 0.7%. Check back in on Walmart. $98. All right, what else we got going on in this market? We talked about Walmart. Yeah, let's talk a little bit of tariffs. The EU, the U.S., they lay out the next step on the tariffs to rebalance those ties. And yeah, talking about the numbers here. So you're talking about tariffs, you're talking about pharmaceuticals. So there's going to be a 15% blanket. The details in here. Because it's going to be 15%. Yeah. Well, no, that's not. Here's the car. 15% tariffs on European auto imports, down from the current 27.5. Yeah, once the EU formally introduces the necessary legislative proposal to enact, they will come down. Ford down 1.2 right now. GM down 1 percentage point. Stellantis down 1 percentage point as well. You jump over to Tesla, down about 0.1% right now. Let's check in on the high flyers this week. Okay, a little bit of a reprieve. It was a little nice bounce yesterday. But boy, the volume. Robinhood up by 1% today. Palantir, another one. Slightly in the green. Coinbase down by 0.6%, $300 down from 444. Bitcoin shares down $1,100. We check in on Ethereum. Didn't quite get that all-time high. Ethereum down by 1.8%. We check back in on crude. All right, price to the downside on that crude market. Pressure to the downside. Every little bounce we get is met with some pressure right now with crude. 62.63 right now. Yeah, so jumping over to Meta. They were posting about it in the den last night. So they've frozen their AI hiring. And, I found myself thinking, right, so he's hired a tremendous amount of people, obviously, for a tremendous amount of money. They've frozen hiring in the AI division after spending months scooping up 50-plus AI researchers and engineers. Now imagine, in AI, okay, the better you are at AI, the better AI gets, right? This sounds like a sci-fi breakdown of things. But the better you are at AI, the better AI gets, right? So you hire 50 people. Do they really need to hire anybody else if they're the 50 best AI people in the world? Can't they, those 50 people alone, just create an agentic program that will be their agent to do whatever they need to do? I'm exaggerating a little, but not really. You control the top 50 people that are building out AI infrastructure. They're probably going to be able to use AI. And yes, they're going to need more than 50, but to a certain degree, right? A 50-plus team of the top AI researchers and engineers. How many people do you really need when you're going to be able to use the AI that you're creating to help you create more AI? Wild stuff. A Meta spokesperson confirmed the freeze, a basic organizational planning, creating a solid structure for our new superintelligence efforts after bringing people on board and undertaking yearly budgeting and planning exercises. I mean, it almost makes sense. If you're worried about what Zuckerberg's willing to spend, well, let me put it this way. If somebody walks into his office that he thinks is worth it in the AI spectrum, do you think that AI freeze is going to matter when it comes to hiring? No. Okay, he's hired everybody he wants where he thinks he has the team together to get it done. They're going to organize, and if somebody else comes along they'll do it. But in general, the blanket hiring, I guess, is over right now. Costs going to be in focus for sure. All right, Meta off by 0.7%. Amazon off by 0.8%. Apple shares off by 0.2%. We check back in on Walmart. Walmart down $1.80. No, excuse me, that's Wayfair. I was like, what's going on? Yeah, down $4.40. Walmart 98.17. S&P's off 18. Don't go away, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You got Walmart pushing into session lows, down by 5%, $97.38. Market digesting that they missed their numbers on earnings for the first time in a few years. Longer term, they're probably going to be fine. But yeah, margins under pressure, and they're talking about as they're replenishing their inventories, they're seeing week to week the cost of tariffs going up. So that's going to be a pressure that they're going to be facing. Nonetheless, man, they jacked up those net sales almost a full percentage point. For a company that size, man, remarkable. All right, taking a look at some other moves that we have going on. Yeah, how about Cracker Barrel? I keep seeing these pop up. What's going on here? Hold on. They have any news more than just an acceleration on... So they're having a whole change of theme going on. They changed their logo. I saw that popping up. They changed their restaurants. Nobody likes change, folks. So they're getting everything they can online. But change is difficult. And they have themselves a little niche, and I'm not sure where they fit when they change things to just be a restaurant. And yeah, it's kind of down by 9%. They're going to have to change. Look at their logo is still up here on the Thinkorswim. They're going to have to get that one. Yeah, they're trying to adapt with the new. But think about the competition in that area. Our young folks, is that, I guess, right? That's a tough one though, Duffy, right? Imagine, how does that work? Can they win over a younger demographic by just basically changing the inside of their restaurant and their logo? Whew, I don't know. Hey, kudos to them for going for it, all right? Because you got to go for it, folks. The other side is just you don't change, right? There you go. Adapt and evolve or become extinct. But boy, it's an interesting sector in terms of how you adapt to that one. And what do we have? It reminds me almost, though, of IHOP and like B-Hop and being like, no, this is your role. This is why you fit. This is like, there are a few examples where like Cracker Barrel, that's their purpose they serve. But hey, guess what? Sales are sales, profits are profits, and look at that stock chart. All right, so that's what matters as well. They were doing well. You're a third of the price you were trading at in 2021. So yeah, what do you got to lose, man? Cracker Barrel, though, down by 10% right now. Let's see what type of a size we're talking about in the company. Well, Cracker Barrel, the whole company can be yours for $1 billion, folks. 1.1 to be exact. I kid. facing some heat today. Market's facing a little heat today as well. We go back to a daily. S&P's. All right, 63.80. We're down by 32 points. And you were really lower right out of the gate. Okay, this is a 15-minute bar. That 9:45, 10 o'clock, and 10:15 was basically the move lower. That got us to 63.70. You dipped 8 points lower, and then the market rebounded on relatively light volume. We're coming back down to test that area, folks. 63.70 is the mark. And we might be there in the next 10 minutes before I end the show. We're trading right now 63.80 and 63.70 is kind of where that bottomed out yesterday. NASDAQ 100, you're talking about a price level about 23,050. You make it down to that level on that move at 10:15 to about 23,063 was the low. Let's check out some of the movers. Yeah, it's the usual culprits. Amazon below your lows of yesterday. Microsoft below the lows of yesterday. Apple below the lows of yesterday. Look at this. Not NVIDIA, as I mentioned, one of the strongest. Look at NVIDIA, barely in the red today. Meta shares, slightly above the lows, not quite there just yet. We jump over to Google. There you go, up by 0.4%. But yeah, Walmart dragging this market down, off by 5.3%. Target off by 1.5% right now. Jump around to some of the other tech stocks. Look at that Salesforce off by 2.5%. Oracle slightly in the red. Okay, Dell catches a slight bid. Coinbase off by 1%. Let's take a look at yields this morning. We're sitting at 4.3 when I was writing the newsletter this morning. And yeah, and here's, if Walmart is, and man, Duffy's saying it's great, Walmart may be the canary in the coal mine, right? If they are the canary in the coal mine, okay, and there's some real problems here for margins, for consumer confidence, for pulling back on some of that extra spending that they don't need, right? Their biggest growth is in the upper earners. They're a gem spot right now, okay? If they're facing that heat, imagine being their competitor, kind of what I said before. So if Walmart's down 5.1% because they're missing on earnings, meanwhile, they're jacking up their sales by almost a full percentage point of growth, right? They were going to grow from 3 to 4%. They're now going to grow from 3.75 to 4.75%. Almost a full percentage point increased on net sales. Where are they getting that sales from, right? If people are actually pulling back, there's going to be some pressure if that is the deal. And yeah, Walmart will pull back with everybody else. But Walmart, well positioned to handle the price pressures, okay? And like I said last night, I was ordering it on last night, and it's amazing. I don't think, there's very few times, folks, that I've actually went to Amazon, went to Amazon, put something in my cart, went that far, and then actually said, you know what, this is a little expensive. I'm going to check Walmart. And it was like a heck of a lot cheaper, and it was just some normal household stuff, folks. You know what's funny is I got to go online and I got to order a water filter right now for one of the rentals that I have, okay? And I always order it on Amazon, and I'm going to see if I can find it on Walmart. You got TJX holding up well. Target off 1.4. And when you get the S&Ps, a little bit of a bounce there. There you go. That's what you want to see if you want to see the bounce here. Because we were coming into an area. You put it back to a 5-minute. Yeah, you come back down. You test those lows, man. You break those lows. We do it with volume coming into Jackson Hole tomorrow. But yesterday was a big day. And really, I imagine people are going to get their ducks in order. And then we're going to come into the afternoon and the main events tomorrow morning, 10 o'clock. Yeah, prices are up, even at my darling Sam's, man. You know, I would always buy the big batches of chicken breasts. I'm gonna pull it up. And they're huge. I end up freezing some of them. But yeah, that was like 259. And I think you're pushing 299 or 309. Percentage standpoint, 277 from 249. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So I had to dig into it. I went into my Sam's order history, folks, and for their chicken breast, it's not as bad as I thought it was. And you're buying a lot. Like, you're buying 5 pounds of chicken breast to get this deal. Last year, it was $2.68 a pound I had on the chicken breast, and now it's $2.77. That's not bad, man. Okay? That's 9 pennies, right? What is that percentage-wise? You're talking about 9 divided by 268. That's 3.4% on the chicken. I thought it was a little bit more, actually. Hey, it's not 2% though, right? What happened to 2%? See how the brains are recalibrated? And that's part of the issue that the chairman's dealing with. Do you see how my brain just went to, well, 4%, it's not that bad. That's not how it's supposed to work. And that is part of the issue there. And how quickly I was like, oh, food costs. Because I thought it was actually higher. And I wonder where my brain is going back to, or maybe I saw it a little bit higher than even that, but it's $2.77 a pound. And hey, if you're looking for deals right? $2.77 a pound. Yes, it's 5 pounds of chicken, folks, okay? And yes, I'm not even sure what kind of chicken it says. Let's see what it says. In terms of organic, what are we dealing with here? What do they call it? Boneless, skinless chicken breasts. And what do they call it? Because I'm sure there's more organic. I can't pull it up. But that's if you're paying $7, $8 a pound at Publix, folks, yeah, you see where people are getting pushed to that avenue, right? And I was paying Publix prices. I buy the good organic, maybe I'm buying the Greenwise, right? Greenwise, organic, chicken breast. And listen, if you're buying organic, sometimes meats, it might be worth it, okay? Eggs, I like it. But at $2.68 a pound, man. Walmart, though, under pressure today with the market. Down by $4.72 right now. All right, folks, thanks so much for kicking it off right here with me in the Morning Market Kickoff. Stay tuned. Basil Chapman, he's coming up next. We got Steve Rhodes, Fast Market, Larry Pesavento. I'll be back this afternoon. Have a great Thursday, everybody.